Welcome to Trader's Edge. I am Jim Iuorio. That's Bob Iaccino. Thank you guys for joining us. And by the way, we also, the two of us with Mike Arnold, our chief strategist at Path Trading Partners, we do the Unfiltered Investor newsletter, which we take all the topics we talk about on the Tradier platform and we bring it over to there as well. Please join us there. Robert, how are you?
Good. How are you, buddy?
Good. So what are your thoughts on this week? Again, so Friday, we have not talked since Friday. Friday was an absolute disaster as far as economic data goes. The stock market just got pummeled, and all of a sudden we've come back a little bit. What's been the narrative shift?
As we laughed at with Mike Arnold, I think I take sort of the same view that he did. The little blip that we got for the equity markets did nothing on my view of it. As a matter of fact, on Monday, I bought the Mag 7. I didn't think that Apple would be the best help for that particular trade. That kind of shocked me. But I bought the Mag 7. I bought some more Target. I bought some riskier stocks that I got out of today as they weren't working out. But I looked for deals and things that I didn't feel were that overdone, or at least their overdoneness was likely to continue. So I didn't buy it on Friday. Hey, we haven't believed the data in a long time. And this is something I want to talk to Nancy about. So I didn't think that particular data set with those revisions was the idea of a longer term trend. But if it brought the Fed closer to cutting rates, I'm all for it.
I have no doubt about it. I think that the Fed should have cut rates. I think that if they saw that data 3 months ago when it was come out in real time, that there is no question they would have been cutting. The fact that they haven't yet is a little bit, I don't know. It puts us a little bit behind the curve, which I think the stock market knows that now. But anyway, why talk to us and hear our opinions of it when we have the great Nancy Tangler, the CIO of Laffer Tangler Investments? Let's bring her on. Nancy, how are you?
I'm good, Jimmy. How are you?
Good. It's good to see you. We don't talk to you near enough. I honestly, I'm not just full shit. I love every conversation we have with you, and I'm so appreciative that you come on. Where are you coming to us from?
I'm in Lake Tahoe for the summer, Incline Village.
Oh, fantastic. Do you get out on the lake much?
Yeah, I have a kayak. I don't have a big boat. I couldn't maneuver all that. So I go out in the kayak. It's awesome.
That's at one, that little island that's in that one little bay that has the house on it. That is so wild. What's the history of that? Do you know?
It was a tea house for the woman that built it. I can't remember her name all of a sudden, but she used to row out there and have tea with her friends. And I know
it's outstanding.
Yeah, it's outstanding. Any of you guys who've never been to Lake Tahoe is just gorgeous. It's one of the most beautiful places. So you heard what Bobby and I were just talking about Friday. Can you, first of all, before we get into the market talk, can you defend what the president did in firing the director of the BLS?
100%. I just wish he would have not made it political and said that numbers were being rigged. What was happening was gross incompetence. Yes. And remember, this isn't the first time. Last year in May, we had that year-to-year 23 to 24 revision of over 650,000 jobs. So what that means, well, it means that they can't count and they're not competent. You and I would get fired if we
absolutely
that kind of message. But also, it understated productivity last year, and it will understate productivity again this year because you're calculating that number on an inflated number of jobs, and then no one goes back and corrects it. So I think the numbers have been horrible for a long time. I think they should clean out any of the agencies where we get this kind of garbage on a repeated basis, and we have been doing it.
And the people who push back at it, like this was amazing to me. Was it done inelegantly? Yes, it was done inelegantly. It's like firing the coach in the middle of a game and instead of waiting for the game or the season to end. That was Pete Najarian's words, and I loved it. But the reality of it is the coach needed firing because he was clearly incompetent. And you can tell me that it's 2025, and I can walk down a street and a billboard can mark me and make an advertisement for what I want at that particular moment, and yet we can't get slightly more accurate data than we did 10 years ago. I think that's crap. I think we need it. Yeah.
It's ridiculous. Yeah. I am 100% with you.
Now, that being said, before I bring Bobby on for the next question, I'm actually of the camp. I think that maybe they go 50 in September. I'm not convinced of that yet. It's like a 60% probability to me, but I think the stock market on Friday was telling us you bozos got 6 weeks before you can do anything because you're strapped into the meetings because you don't want to appear panicked. But now I think obviously the markets are like, yeah, they're coming, the cuts are coming, and we're not falling out of bed. But do you think they're going to go 50 or 25 at September or no?
I don't think they're going to go 50. I think Jay will reluctantly cut 25 basis points. From when we're on the radio together, I have been so critical of him since June of 2021. I started writing pieces, and the one I liked the best was "It's time to replace the Fed with Chat GPT," because at least Chat GPT learns from its mistakes. This is the dumbest example of hubris and, in fact, just nonsense.
And what she's referring to in June of 2021, CPI printed 5%. The housing market, there was no argument against that it was on fire. That's when he said transitory. That's when he hit the pedal, put the pedal to the metal, and for the next 8 months started throwing gas on the fire. There is no question in my mind that 20 years from now, we will look back at this Fed chairmanship and call it an abject failure. And again, he seems like a hell of a nice guy. I don't like saying that. I get no joy in it, but he just has done a bad job. Yes.
Yeah, no, absolutely. And I would only take issue with one thing you've said. I don't know how you can be a nice guy and make so many mistakes that impact the American people and then not own up to it. I mean, remember the first bear market he gave us was in 2018 when he raised rates because of the Trump 1.0 tariffs. Right. And just been a hapless, arrogant, in my view. I know he does the all shucks thing, but he hasn't learned a thing.
Okay. And it's, I'm in. Now I hate him too as a human. I'm kidding. Bobby.
Yeah, I want to go back to the BLS thing and then continue the same conversation that we're on. I think one of the things that bothered me about the firing of the BLS chairperson, whatever the F we call him now, chair, was the optics of it were terrible. He had a bad jobs number and bad revisions, whether they're accurate or not. I'm going to use the word bad because that's how they appear to the market. And he immediately fires the head of the unit as if that person is right there with an old school accounting calculator going like this, going, I'm going to subtract 300 because it's Trump. We all know that those of us been involved in the markets for multi-decades, like all three of us have, that data has been crap for a long, long time. I said on one of our other shows, why do they release it every month if they can't get it right? Why do we do revisions? Why don't they give us the June payrolls data in September? I understand that that's not the best way, but then market participants and others that need that data will go start looking elsewhere for better data. Right. And I think it does exist. I'm not ready to say where, but I believe it does. So my question is, when I was a kid, we had a family business. And when an employee would come and complain to my father that he wasn't making enough money and he couldn't get his work done, my father would tell him, take the next day off with pay. I'm going to do your job. And if he was able to do it, he'd go, well, I did it in the time allotted. Why can't you? You do it every single day. I don't know why Trump didn't send Doge type of people into the BLS and said, find out what's wrong here because that data is not correct. As opposed to going, she's fired. She's anti-Trump. She hates Trump. She loves Biden.
He's been working on this, Nancy, and I think it's pretty good. Actually,
it's getting better. It's getting better. Do you think I'm nuts in saying that? I mean,
no, I could not agree more. It's just like him going after Chairman Powell. Like, let us do it. And I know he's not the first one. You got the old LBJ with McChesney Martin, and he threw him up against the wall and pushed him around his ranch. I mean, then Reagan tried it with Volcker, and all Volcker had to do was stand up and glare out to his cigar, and that was done.
No one was pushing Volcker around.
No, but no, I agree with you completely, and I think that's where he's his own worst enemy. And it's an what is it? What's the sports analogy I want? An own goal, or
it's an own goal.
Unforced error.
Yeah. That's awesome. Okay, so Mark Zandi today came out and said he believes there's a recession coming. I don't completely disagree. I always thought 2025 was going to be somewhat of a tumultuous year just because of the fact that we're going from one economic system to another, and sometimes that path is inelegant. I don't think and I thought 2026 was going to be the beneficiary of all that. I believe we are going into a recession. Labor market seems crappy. Real estate is starting to head lower, which we all knew this was going to happen when we froze up the supply with the rapidity with which we raised rates. But the Fed has dry powder. Obviously, short-term rates are at 4.375. Do you think we're going into recession? Do you think the Fed can handle it? Do you think it will affect asset prices greatly?
No, because I listened to Kevin Hassett, who is annualizing the 3% GDP growth bounce back that we got this quarter. That was sarcasm, obviously. I don't think it's good to be a smart ass at my age.
No, it is. It is very good to be a smart ass at your age.
Never stop.
There's only a few things I'm sure of.
I think the economy is clearly slowing. And I think, the consumer, there are cracks in the labor market. I think the consumer is starting to slow down. But what we're hearing from companies across sectors in the earnings calls is that, we got a lot of raised guidance. So not only did we get 83% beating on the bottom line, we got 80% beating on the top line. That blew my mind. So, and it wasn't pull forward because that happened in the first quarter for the most part. So I think there's good news, but then there's these cross currents, and housing is the biggest one in my mind. I think one of the many reasons I think the Fed should cut, but we'll see. So I think certainly economic slowdown. If you average Q1 and this, in Q2 you get like 1.5% growth. Productivity is understated because of the overstatement of the jobs, but I think we'll muddle through it, and it won't be super pretty, but we'll get there.
So, Nancy, it's my opinion that one of the only things that's going to bring some relief to consumers from the compounded inflation that we got through basically the Biden-Powell inflationary surge that we got is productivity, right? Now, do you think two things? Do you think productivity is understated to the point where people are getting relief? And number two, do you think AI is actually going to help with this productivity that we need? I mean, if you look at where we were 2001, 2002, it was about 3.9%. Now we're at about 1.5%. So I figure we're going to get to at least 2.5%, 3% to start giving consumers kind of a break from the prices they're paying. Where does it have to go?
Yeah, no, I think you're right. I think that's the right number. And I've been drawing this analogy to the 90s for almost 3 years now. And our investing theme has been old economy companies that are utilizing the new technologies, pivoting to those technologies, and then the providers of the picks and shovels. And what we're hearing is, that companies are improving productivity and it's showing up in margins. I think, in the 90s, we had 4% productivity growth at some point. So I think we could get there. It's just a function of getting the numbers right so that we can, look at it and say, okay, this makes sense. But if you look at the companies, and I think that's what you have to do from an economic growth standpoint, Jim. So I'm with you. We're on our way. I don't think we're going to get all the way to recession, but the companies are telling you that things are looking pretty good. And job elimination is, of course, an issue. Everybody's worried about that. But I think what AI is going to do is just make us better at our jobs. And yeah, there'll be people that'll lose their jobs, but they'll be retooled, as they always are when we introduce new technologies.
So I have a couple questions, because I have this thesis about AI, and then I want to get to Bobby, I think that echo's coming from you, by the way. It was happening when you were talking too, but maybe not. I'm not sure. But I think that AI and the big publicly traded companies, they boast about it. They say we're replacing our HR department with AI. But in the smaller companies, law firms, accounting firms, they're using it a lot, but they're not really talking about it that much because they're afraid it's going to replace them. So I think AI has crept into, it has dug roots a little further than we believe. I want you to address that, but then I want to talk about if there's names on your radar that aren't NVIDIA that you think are the way over the next 5 years to capitalize on what I think is going to be an enormous movement in AI.
Yeah, I think you're right. And what I would say, Jim, is that you also want to add in robotics. Digitization's not a big deal. Cloud computing is what it is. But and we already know, we've already seen the effects of that. But I do think that we're going to continue to see adoption and starting in small businesses. Like, we started using software that would allow us to AI summarized all the earnings calls, and then we go through and listen to what we want to listen to. But and we're a small business, but I think you will see it across sectors. And so, like, one of the names we've been adding to is Deere, that is developing autonomous tractors, and it's all AI driven, and also spot weed killing within a millimeter, so they don't touch the plant, but they get the weed. This is all part of an AI driven program. But then in addition to that, we own the usual suspects, and then around the edges, we own other names that we think will benefit. So Walmart's our poster child for embracing all the technologies. It's shown up in their margins, but also it's shown up that by a significant increase in the dividend. This was a company that raised the dividend 1% for like 10, 12, 15 years. And the last 2 years, they've raised 9 and 10%. So they're confident that they're going to continue to be able to earn. And they just hired an AI expert from Instacart. So they're pretty serious about utilizing the technologies to drive growth and margins.
So before I pass the next question to Bobby, that could be the takeaway of the whole show. Everybody's looking at this one story and saying, oh, I missed NVIDIA, or I got to jump in now. But the reality of it, it might be some of the more boring names like Walmart and Deere that are going to be the big recipients. I think that's fascinating. Thank you. Bobby?
I think that's fascinating too. And I'm also happy to hear it because I bought Target a couple days ago. And it didn't do well the first day, but then it started picking up after that. But part of the reason that I bought it was I think the consumer is going to start to benefit, especially from rate cuts. And Target is sort of that perfect discount to middle range where the consumer actually will go in and they feel like they're not shopping at the dollar store, but they're sort of shopping at the $5 store, right? And they're at Target. So what do you think about that particular investment? Let's say medium term.
Yeah, so we own it. One of our strategies. It's a slower growth, a strategy that's focused on dividend growth, but slower growth from an earnings standpoint. I think they need to can the CEO. I mean, Brian Cornell has been pretty big failure for a number of years, and the board hasn't really stepped in to do anything about it. But from here, I think that was a wise trade because you will see the benefits. You got back to school coming up. You have we may get some stimmy checks out of this administration, returning some of the benefits, the tariff revenue. So I think there, and oil's come in. So I think there's a lot of reasons.
What do you guys both, this is for both of you, what do you feel about that? I mean, it's difficult when you're trying to win midterms to not fall prey to the stimulus check thing that he actually sort of campaigned on, right? I think it was Vivek Ramaswamy that brought it up as an idea, and then Trump kind of adopted it. What do you guys think of that kind of a thing? Nancy, you first.
Oh, I hate it.
At your core, yeah.
I hate it. I'd rather we incentivize people through tax policy and to make the right decisions about their own lives. But just handing out checks is so unbecoming and so last administration. So I'm much more in favor of, running an effective country, getting taxes in a reasonable place, and watching the economy grow. Because that's the only way we're going to get out of this deficit and debt crisis.
This will not surprise you, Bobby, but I despise it as well. And here's what I really hate.
Your answer.
The government on both sides, and everyone, because we argue against the Democrats, they think that Bobby and I are staunch Republicans. We're mostly libertarians. We have plenty of hate to go around, just more of it for the Democrat side. But both sides want all the money to come through them. They'll take it and then they'll distribute it. If they really wanted to do the most good, they'd never let it leave the public sector in the first place. Keep it in people's hands, like Nancy just said. Like you could force technologies that you wanted to like chips or electrification, just make big tax benefits for that, but they don't do that. They want to take all the money and then direct it to where they want. It's corporatism at that level, and this is just buying votes. So I think it's absolutely absurd. Bobby, that didn't surprise you in the slightest, right?
No, I mean, I think it was Alexis de Tocqueville, but don't quote me. He said that democracy works. I'm butchering this, by the way, but democracy works only as long as the elected realize that they can buy the votes with the electorate's money.
Yeah.
And that's kind of what that would be. But I got actually a personal question for both of you.
You've grown up, Bobby. Next it's going to be,
I got butchered. This is a personal question for both of you. Is if Ron DeSantis actually has any success at all in eliminating property taxes, as he says he's trying to do, will that convince either one of you to make Florida your at least permanent winter home?
Nancy?
My winter home's in Scottsdale, my friend. I can't do the big bugs.
No property taxes. There are big bugs.
Yeah, I
They
can't.
don't pay property taxes right now. So
Yeah,
they get to live it.
crawlers that go around. But I love Florida. My son's actually a Navy pilot, and he spent a lot of his time in Jacksonville. So he's actually heading back there from Hawaii. So I love it. I just don't want to live there. I'm sorry.
Yeah. As you know, Bobby, I'm spending, extended periods of time each winter in the Keys and loving it. I think it could hasten that. It could make it go quicker. By the way, Nancy in Scottsdale, how many people on your block are Chicago transplants? It seems like it's the furthest western suburb. There's tons of them, right? Do you see Cubs flags all over?
Yeah, and then all the restaurants, like, what's a Culver's? I've never seen it before. I was like, yeah, you people need to stop eating like that. But
Illinois. So Michael Madigan, who ran Illinois from his corrupt position for the last 40 years, his big thing was that we'd have this huge middle class that was comprised of government employees with these big pensions. What he didn't count on is that half of them would move to Scottsdale along with their pensions. So when my snow doesn't get removed, I curse Scottsdale. Like, get up, go on your bike ride this morning while I'm digging out of my snow on the street.
yeah, that's right.
Anyway, let's talk back about markets. I think this show's supposed to be about markets. Let's talk about technology for a second. Bobby mentioned it in the first 2 minutes in that he bought the Mag 7 on that opportunity that was on Friday. Do you still think those are going to be the drivers in the next month, 2 months, 3 months?
I do. I mean, listen, the death of the Mag 7 and technology in general has been grossly overstated. Every summer for the last 3 years, we hear the talking heads on CNBC come out and say the trade's over. The market needs to broaden out, and it's, the leadership is too narrow, which is not true if you look back at other historical bull markets. But when you combine the earnings growth and it comes in around 27% for the 7, and that's with Tesla and Apple dragging it down. I think you have to say, if we are in a decelerating economic growth environment, you want to own the reliable growers. And these companies are not only reliable growers, but they've got fortress balance sheets. And these are not, this is, in this regard, this is not the 90s. These are not eyeballs on a website. These are companies with real businesses and real growth. And I was really impressed with the earnings that we saw this quarter, and particularly in tech. And, we were adding to a lot of those names during tariff tantrum, and it was hard to do, but we've got huge gains across the board because I think you want to be in that trade for a couple more years.
So Bobby, I'm going to say it again. I own Google for 2 reasons. I'm not going to talk about the one I always talk about. Nancy, have you heard me talk about why I own Google for the last 8 years? Oh,
he thinks it's the CIA.
I believe that Google is just a branch of the CIA. I fully believe. By the way, laugh all you want, but I believe that's defensible. If we had a debate format, I think I could convince the judges that I have some validity, Myra.
Love it.
Secondly, let's talk about Waymo and self-driving, because I own Tesla and Google for both of those reasons. I think it's going to be an enormous thing. Is that part of your calculus for owning either of those stocks, or do you consider that at all?
100%. So where you can't drive a quarter of a mile without encountering 5 or 6 Waymos in Phoenix and Scottsdale. They're everywhere. And so we've been kind of desensitized. And a lot of people still think, oh no, it's futuristic. It's real. It's now. I haven't taken a Waymo, but everyone at the firm has. And so we own it for that reason. Yes. And then Tesla, we've been saying for a long time that we thought, the EV business is important, but it's not critical going forward, other than to supply robo-taxis and to be the source of the AI volumes of data that they have, billions of miles. So I think you want to own Tesla for 3 things. You want to own it for robo-taxis. You want to own it for the Megapack business, which is the utility grade electric utility grade battery business, and you want to own it for robotics. So I love it. And, Google's been harder to love until the last couple of weeks, but I think you want to own Google, because what we heard in earnings as well was that the search business is declining, but it's being replaced by AI searches. And,
right. And they're the CIA.
And that's
let me make that case for a second. Let's say it's 15 years ago and the three of us are the leaders of the CIA. And all of a sudden someone comes to us and says, you know that Google collects intel on people way better than you guys do. What would we do? We would send our representatives over to there and have a quiet takeover. Anyway, Bobby.
So first of all, I'm not excited about self-driving because of self-driving taxis. It doesn't thrill me at all, though it seems like it would be a cheap way to go. I kind of like talking to the Uber drivers and the Lyft drivers. I'm a social person at heart. But yeah, I think Jimmy would be like, yeah, shut up. I'm in a hurry. But
wait till your kids want to take your keys away. You'll be all about robotaxi.
Well, I can't wait to have a household self-driving car. That, we don't have any kids, but my wife would be like, where are you at? You do have the car? Yeah, I'll send it to get you. I can't wait for that. Now, of course, I shouldn't publicly say that. I also can't wait to have about 6 or 7 Buffalo Traces and just hop in the self-driving car and, sit in the back seat and pretend I'm driving drunk. Can't wait for that. But I did test drive a Tesla with full self-driving, and Jimmy knows this. I couldn't believe it. It was one of the coolest things I ever saw. So it seemed futuristic, but it certainly seemed like something that I might buy in the very near future. Question is this. You mentioned the Mag 7. It's hard to ignore. I don't remember exactly how you put it, but you have to own the companies that are constantly growing revenues and profits, somewhere along that line. A friend of mine sent me this thing the other day asking if it was real. Complete panic. Michael Blurry or Burry? What is he, Burry?
Burry.
Michael Burry just sent another chilling message to investors. He has a $98 million bet against NVIDIA. First of all, I thought, 98 million? I mean, where do they get that number? Well, it's the puts that he bought. So all of a sudden, everybody just assumes that buying puts means he thinks the stock is going down, as opposed to
even though he's long the stock.
Insurance, right? For a massive long position. My question is this. When you guys look at stocks that are constant growers, whether it's NVIDIA, AMD, Tesla, Google, whatever it is there a certain combination that you can reveal in simple terms that you say, might be time to pull back on this one?
I mean, we look at when we're trimming. I'll give you an example. So we bought Apple in 2012. And we've had a nice run with it. It's up like 23.5%, I think, ever since Tim Cook took over. And so first we started trimming it because it got to be too big. Then we started selling it because the valuation got too heavy. And we retained about a 2% position. We actually bought some yesterday, funny enough, but not because we knew anything. But I think one of the things we also pay attention to, particularly in a stock like NVIDIA's, yeah, okay, so the multiple's pretty high, 30, 40. I can't remember what it is today. But when you look at it on a price earnings to growth basis, stock's cheap. It's trading at 1 times. So I think it varies depending on the company. When we see deceleration in growth, we pay attention. But remember, Azure was growing at 95% just 5 or 6 years ago. It has decelerated, but it's still a monster for Microsoft. So those are the kinds of things we pay attention to. And then management. And we got out of Intel, thank God, about a year into Gelsinger. And we've gotten out a lot of names that, are in the tech and other parts of the market because the management teams were just not up to the task. And that was certainly the case with Pat Gelsinger going hat in hand to DC.
I have Apple's PE at about 30 as of yesterday, just so you know.
I want to take a quick break and talk about our sponsor for a second, but I want to get back to Apple because I've sold out of most of my Apple. But Luis, can you put the banner up? I'm going to ask a favor of you guys watching the show is that I talk about it each time we do it. Please try Tradier Options Pro, Tradier Pro, 3 months for free. All you have to do is scan that code. We've had traders options traders who are highly sophisticated down to novices who all say this is an extremely valuable tool that they can't trade without it. So give it a try. 3 months, totally for free. Just scan the code. Thank you for listening. Back to Apple. So I over this year, I've trimmed out most of my Apple. I have actually very little of it left. And it's not that I don't like it. I just like other things a lot better. And so where do you fall on that? Is there going to be a resurgence of Apple? You said you bought it recently.
Yeah, we added to it. We have a very small position as well, Jim, but a lot of our names, particularly in the ETF we run, TGLR, a lot of those names, we're being forced to sell them. I mean, Oracle became an 8% position in the ETF. We had to trim it way back. Broadcom, we're constantly trimming because they're, above 5%, we kind of break all the rules. So I think the reason we added to Apple was not super sophisticated. The stock is dramatically underperformed. They had a great quarter that may not be sustainable because they had, the Chinese government was supplying incentives for people for their citizens to buy electronics, and they were buying Apple phones. So that may be a one-off. But across the board, the company really delivered. Mac growth was high, phone watches and headphones. So I think what we observed is that maybe the bleeding had stopped, and we haven't purchased the name for, I don't know, 5 years. We've just kind of owned it, let it run, and then start selling it. So it's not a huge name for us. It's not in our 12 best ideas, but it is one that I think you'll be happy, I think my time horizon might be a little longer than yours. Mine's a couple of years. You guys tend to be more tradey, which is great. I wish I was that smart.
Sometimes I don't feel that smart. I'll tell you that. Sometimes it goes well, sometimes it doesn't.
Yeah. Well, that's all.
I want to get to, there's a bunch of questions for you, and I want to make sure we get to them before you have to leave us. Remo said it's Nancy's thoughts on Apple. That's its stock charts, but we already did that. Then he said, will Google Gemini surpass Apple in AI? What do you think?
Yes.
Yes.
I think he already has.
Of course, the CIA is going to do that.
Yeah.
Yes.
Yeah, the other thing to be aware of on Apple is that we've got that ruling coming out on the Google antitrust lawsuit. I think it might even be this week. So that's $20 billion in revenues for Apple that may be in jeopardy. So I say be nimble as you pick away at it and wait for opportunities. But yeah, I think they're going to surpass Apple, no problemo.
Widge says, I just don't understand the reason for cuts. Sorry, guys. And I haven't been a fan of Powell since his first mistake in 2018, which were those cut taper tantrums. But go ahead, Jimmy.
So the reality is this: is Jay Powell himself said that he believed that we were above the neutral rate. So I'm not, even if you don't think that we need to stimulate the economy, because we have seen some numbers that have hung in there pretty well. But if you don't believe we need to stimulate, we still are probably above the neutral rate in my mind. And particularly when I saw that labor data, when we saw the labor data a month ago, and the ADP number was shit, and then the NFP number was just all government jobs, non-productive, I thought, okay, things are changing, and they're changing for the worse. And then we had the revisions from August 1st. So I believe that we should. And Widge, I will say this to you as well. When the market on Friday priced in cuts, they put in another 25 basis points almost before the end of the year. 10-year yields went down. They went from 4.4 to 4.23. To me, that was a wink and a nod to the market that we don't believe cuts will be inflationary. So as long as cuts aren't being inflationary, and the 10 years telling me that, it's worth a shot. Cut 25, cut 50. If 10-year yields start to scream because we're in an inflationary environment, don't cut anymore. Nancy, what do you think?
No, I couldn't agree more. We actually got a cut, basically.
Right.
Market. Yeah. No, and he also said that the Fed was modestly restrictive. And I don't know why you would be restrictive if you've got slowing economic growth. You got labor market, which also add in the jolts. The layoffs were up. So I think those are the things where you look around the edges, but that's not what these people do. When you're data dependent and you got bad data, you're going to continue to make mistakes. So for me, the cuts are got to release housing, particularly for the lower end, and the consumer debt loads are rising, and it's at the low end. So American Express had no problems, but I think we're going to continue to see stretched consumers in the lower income cohort. That's exactly who we should be helping. And I think that the cavalier nature of this Fed is, I don't know if you guys knew this. I interviewed for a position at the Fed.
Did you really?
Oh, I was so unqualified. I think it was the one Michelle Bowman actually ended up with. But what struck me was the guy that interviewed me was the Assistant Secretary of the Treasury designate, and he ended up resigning the next day and leaving before he even went through the approval process. But he said he was from Goldman Sachs, and he said, look what we did for America. We lowered interest rates to almost 0%. And I said, this is why I didn't get it, among other reasons. But I said, if you were somebody who retired with an assumption of 4% interest income on your portfolio, you're now a Walmart greeter.
Yep.
It benefited people like us who are in the risk business. It did not benefit the average American.
Amen to that. And by the way, the notion that you would say for a second that you're not qualified to be that is absurd, Bobby and I. By the way, maybe you're not poisoned by being in an ivory tower for the last 25 years, and you're actually on the ground making real life decisions. I'll vote.
Hey, that's part of the reason people liked Jerome Powell years ago when he first got not comparing to now. So
exactly right.
I just want to go. Widge has got a couple comments that I want to go to Tim's questions. Widge says, when we get inflation prints in the 1% area, I'd be with you. Widge, I'll throw in that, and I'm not going to explain the math right now, but if you just go by the Taylor rule, the Taylor rule says Fed funds should be about 3.25%.
And Widge, he didn't mean explain the math to you. We know you know the math. He's talking about to everybody else.
Yeah, Widge, you know what that is. So if you just go by the Taylor rule, you're looking at 3.25, 3.5 at a high. Then he also said we won't get better housing numbers on the low end until we get institutions out of housing.
Amen.
Lower rates won't happen with that. I don't think anyone here disagrees with you on that.
We don't. And Widge, by the way, Nancy, he's an anonymous Twitter account that we've become friends with because he's smart as shit.
He's still smart.
And when we step out of line, he tells us exactly why we're wrong. I love that. Yeah.
Tim's got a couple of questions. Number one, does Nancy use any covered calls to goose her returns?
We don't, but
that was easy.
We do it in one-offs for clients that really need the income. But no, and I'm just going to brag for 1 second because I'm never allowed to say anything according to the compliance people. But our TGLR ETF is coming up on its 2-year anniversary, and it's in the top percentile for year to date, last 3 months, trailing 1 year, and then our long-term record following that's in the top 1% as well in the databases. But there's 1,100 funds that Morningstar tracks. I was pretty fast. So we just need a better distributor because the assets have.
That means you're qualified to be a Fed governor in my mind.
There it is. There it is. Tim's got another question in here. Will the superscalers get a 20% plus return on invested capital? That's what ROIC means on their CapEx spending on AI. By the way, I wasn't telling you two what it meant. Just anyone who's watching who doesn't know.
That's for me.
Yep.
Yeah.
I mean,
questions are always for you.
I think so. I think that's not too big of a stretch for them. But it's the time horizon that is where it matters. Not initially, long-term potentially, because they're not all monetizing the AI part of their business. Microsoft is, and they've done a good job of it. But so far we haven't really seen the monetization. So I do think we'll get there. I don't think we'll get there next year.
So this is a fascinating question because I'd say this, and I've changed based on Nancy's answer earlier. It has my head spinning. Is that those companies are all fighting over who can make the best AI? Well, we should maybe be looking at the companies that are just going to take that and take the discoveries that they make and learn how to automate better, like Deere and Walmart. I'm going to be looking at charts of those two things immediately. Can I switch over to commodities for a second? Because I did put on a trade today. I'm not allowed to talk about individual stocks due to my futures licensing, but I did buy a gold miner. Because it looked like it was breaking on a technical basis, which I guess is a tip of the cap to gold itself, which I am still a bull of. Do you have gold ETFs? Do you have miners? Do you have any commodity exposure in your funds?
We do. Yeah, we have a clean energy infrastructure strategy that has kicked it relative to the benchmark, but now we're making some adjustments to move away from just clean energy and really bring in the new technologies that we think are going to drive the next round of growth. So think nuclear, quantum, robotics, and additional AI. But we own like Cameco, we own the silver miners, we own platinum, we own gold, a lot of gold, and we own copper. So that has been a really interesting way to diversify our clients. And I think you're wise. I think you're right about gold. And even if it's not just because of inflation or a weak dollar on the world stage, I think you want to own gold. And then begrudgingly, we launched a digital asset strategy because clients kept asking us about it. And now that we have the king of digital assets in the White House and we got the Clarity Act and the Genius Act, we thought, okay, it's still speculative, but we're gonna diversify it for our clients.
So quickly, as Bobby knows, copper was one of my 5 biggest positions for the last 3 years, and I was concerned with how big it was getting. And fortunately, that took care of itself last week.
Isn't he a great guy?
Yes, he's the human headline bomb. Cost me 30% on that position. Anyway, I'm still a supporter. Anyway, Robert.
Yeah, this will be my last question, Jim. I just want to ask sort of a theoretical economic question that I've been asking a lot of people lately. Tariffs. When we hear people talk about inflation, I saw a freaking Bloomberg article the other day that said people are worried about inflation from tariffs. Two things. I personally don't see tariffs as inflationary, even if they cause a price hike because it's one time, and that's not what inflation is.
Right.
Number two, I see them as deflationary. The legacy media was calling tariffs taxes and inflationary, and taxes are deflationary in my economics 101 class. So which is it? I guess I'm asking you, if either.
No, I think my partner, Arthur Lafford Jr., so not the old man, he came out early days and said, he thought tariffs were going to be deflationary. And we share your view on that. And I don't think they are inflationary. They weren't the last time. I don't like them. Like, I think there's other ways to do this, but this is what he chose. And so the question then is, what do you do with it? And we had Amazon came out and said they're not seeing prices go up and they're not seeing demand go down from the tariffs. Flip side of that is, it cost Apple $1 billion in the quarter and it cost Ford $800 million. So, they have an impact, but it depends on what you own.
So just a quick follow-up. A friend of mine said that. A friend of mine that I was arguing with goes, well, Apple said this and Ford said this. I remember a lot of years of CEOs using whatever was out there as an excuse to lower the bar and then jump over it in the next earnings report. So I don't even know how you answer this. How much of that is freaking real? Yeah.
You don't know. I think
I'm sure some of it is.
It has to be. They have to be getting paid by somebody.
Of course. But can I add to something real quick, Nancy, too? Because I do think there is an inclination for some of these companies to use the cover of tariffs to maybe raise prices to see if they can increase margin too. Now, I've long argued, and you know this, and you have too, that tariffs historically have not been particularly inflationary. Oftentimes, the exporting country subsidizes the industry. The exporting company cuts margins. The importing company cuts margins. That all happens before it gets to the consumer. And then it's a one-time thing, as you said. But I am concerned. You started me on this path, Bob, when you said these guys use any sort of cover to lower the bar so they can beat it. Well, they may also use that cover to try to increase prices, to increase margin, and see if they can blame it and say, we're worried about tariffs. So I am a little bit worried about that. But to say that 2025 was going to be tumultuous and all these guys maybe have to sit and see what the fallout is going to be, I still think is reasonable. And 2026 is going to be much better. Where am I wrong anywhere there, Nancy?
I don't think you are, because I'll give you an anecdote, even though it's anecdotal. One of our clients is a Midwestern manufacturer of outdoor steel furniture. And he raised his prices 12% in January. And he said his supplier has gone from 80% Canadian steel, 20% US to 60-40. And he's seen no price increases. He said, and frankly, my margins are too high. So I'm going to I can't raise prices again. I may have to do something else and in fact, lower them. So so there's a lot of that going on too. And it's just impossible to know where this is going to end up. But we're hearing from companies that, margins have gone up in many of these companies and they're guiding higher for next quarter. So I do think you're right, though. I think there is a risk that just like during inflation, when we had the inflationary period, we started getting increases from all of our vendors. We're still getting them every year. So they're using that still. So I think you're right. And, but ultimately the consumer and the market will take care of it.
Yeah. Bob?
Time's running out, so.
We got to go. We got to go by.
She's got to go.
I want to keep talking to Nancy for. No, she cannot go. By the way, I love that
jacket.
No,
she can't.
Cool. I'm doing this whole leather thing.
No, it's very cool. Is it cool up in the mountains there? It's awesome. Good
yeah,
for you.
it's
That's
fabulous. It's
hotter than-
117 in Scottsdale. So
hotter than shit here in
Hey,
Chicago.
with the 3 minutes we got left, can you guys make me understand why property taxes exist?
Yeah, because I mean, somebody's got to pay for the schools, right?
No, you pay if you send your kid. You don't pay if you don't send your kid.
Oh, I'm with you on that. Preach, baby.
It's like, I mean, I'd rather pay for my own garbage service. These guys, well, they're not bad. I'm not going to say they're bad.
I'd rather pay for all of it myself. I agree 100%.
I would too.
on that. Yeah.
yeah.
Nancy, where can they find you?
www.laughtrectangular.com.
Yes.
We don't
And-
even have to say the www anymore, right?
You don't, but that shows our age cohort. www.
I
You
still
know, you guys
dial
know
one.
about this internet thing that's coming around. You can go right on that.
I was going to ask one of my kids, do you still have to dial 1 before you dial a phone number? I don't think you
You
do.
do not. Right?
I do.
Hey, real quick, I just want to put up Widge's last comment there because I thought it was fantastic. Contrary to the reports, I thought Ford had decent numbers and they actually raised guidance
Yeah.
in the light of expensive tariffs.
Yeah,
And the CEO prayed I mean, they just, whatever.
F-150 driver all day long.
Nice. That's most Ford is just basically sells the F-150, right? I mean,
That's
that's
it.
where they make money, correct?
Yeah, that's it.
All right. This has been the Trader's Edge. I'm Jim Iuorio. That's Bob Iaccino. That's our good friend and a wealth of knowledge, Nancy Tangler. Please follow her on Twitter. Go to her website. Thanks, you guys. This is my favorite show to do because I love the audience interaction. You guys are the best. Thank you.
Thank you, guys.
You know how the financial world goes. Here comes the buzzkill. Please make sure to take some time to read this boring disclaimer. We will owe you one.